Hello everyone, this is AMarkets and the MetaTrader, but also we will discuss a lot of interesting stuff on how to use, how to update the MetaTrader platform, how to explain we will explain the Forex Dashboard and also talk about economic events that influence Forex trading. My name is Mircea and AMarkets is a leading financial broker providing an extensive variety of electronically trading products such as Forex, metals, commodities, and CFDs, including major cryptocurrencies for clients around the globe or around the world, worldwide. AMarkets also offers Bitcoin accounts besides the regular currencies, so the customers can freely deposit and withdraw their funds using the most popular cryptocurrency in the world without actually paying conversion fees. It offers direct access to global markets and executes thousands of transactions per day with all the necessary tools for self-trading and also algorithmic trading, along with advanced money management techniques. Today's webinar is dedicated to the beginner traders, with the aim of highlighting some of the most important things everyone should know. Please note that we'll cover only the most important aspects of the following topics, and in time we'll take each and every one of them separately and we'll discuss them in more details. We'll start with the trading platform, which is the most popular trading platform in the world, the MetaTrader 4 or the MT4 platform, and we'll introduce the MetaTrader platform. So let me share the screen. Let's do this right now. So this is the MetaTrader platform, and into the MetaTrader platform, this is a demo account, so don't worry about that. The first thing that I would like to cover is the types of orders that the MetaTrader allows, and the market is still open, as you can see, even though it is Friday evening. The euro US dollar here trades the 16.06 after yesterday's ECB, and this window here is called the Market Watch, and the Market Watch goes from this small tab here. If you click on it, it will disappear, and if you select it, it will appear here, and it shows everything that you need to know from the MetaTrader and all the currency pairs and all the offer that the broker has. Normally, when you open a trading account, a new trading account, demo or a live one, here with the default settings, you will see only a few currency pairs. But if you want to see all the offer from the broker, then you just simply right-click and then you go on show all the financial products that the broker offers. In this case, these are the currency pairs, but also you have the CFDs on most important commodities, or you have also the oil here, or American companies, or stocks all over the world. So that would be the market watch. Now, when it comes to the types of orders, there are many different types of orders that you can use when entering a market. Let's take the euro US dollar, for example, which is the most popular currency pair. And again, please note that this is a demo account, so the balance here is not real. We use it for the purpose of explaining whatever we want to explain, and there are many possibilities to enter a trade. For example, let's assume that we are bearish the euro US dollar and we want to sell the euro US dollar. Selling can only take place from the bid price. As you can see, every currency pair from the Forex Dashboard, this is called the Forex Dashboard. So every currency pair here has a bid and an ask price. If you want to buy, you can only buy from the ask price. If you want to sell, you can only sell from the bid price. Now we want to sell as we are bearish. Bearish means you expect the euro US dollar to move even more to the downside, and the selling can take place only from the bid price, from this price on the left side. Now, It depends very much on what do you want to sell or how much do you want to sell. This one represents one lot, or we want to trade 0.05 or 0.04. These are micro lots. The more you trade, the more you will make, or the more you will risk if the market goes in the other way, in the opposite direction of your original trade. So the first thing to consider, or the first possibility to trade, is to trade at market. Trading at market means to sell or buy at the current prices. So this is 116.03, and if we want to sell at market, let's not sell one lot. Let's sell, for example, 0.1 or 0.1 lots for every pip that the market moves. We'll explain the notion of a pip later. Then we will make $1, or depends on the account, and this is a dollar-based account. So let's sell, for example, the euro US dollar. Automatically the broker, the AMarkets, executed, and we have the confirmation here that we sold it at 16.059, and now we have a profit of minus 1.8 at these current levels. Now this is called selling at market, because we sold at market. So this is one way to enter the market. Another way to enter the market is to simply place a pending order, and the market, the trading platform, the MetaTrader, will execute it only if the price goes there. For example, I want to sell the euro US dollar, but I want to sell it from a higher price, not from the current. Now it is 16.04. I want to sell it from 16.20 if it goes to 16.20 based on my analysis. So what I would do is I will go on the euro US dollar as well, double click on the pair, and then on the type of execution here, instead of instant execution like we did a bit earlier, we'll place a pending order. And then when you want to sell from higher level, that is called a sell stop order. So let's say that we want to sell from 116.20. So we go a sell stop, a sell limit order, sorry, a sell limit from higher level. Let's say 1.1620, 1.1620, and then we want to have a stop loss, always have a stop loss on a trade and a take profit. It shows planning, it shows discipline, and you'll only have to gain out of it. And then on the stop loss, let's put it, I don't know, 1.1640, just for the sake of exemplifying. And on take profit, we go with 1.1580. So we risk 20 pips to make 40 pips. This is called the risk-reward ratio of 1 to 2. You risk 1 pip to go and get 2. And then we simply placed it on the pending order. And now we have these red lines here. The green line, the first green line, the one that you see here, represents the trade that we took at market, when the active trade. It is 16.04. Let's put a stop loss on this one. Let's put a stop loss at 1.1640, let's say, as the equivalent of the other one, and take profit 1.1580, and we modify the trade. So now, if the euro US dollar goes at 16.20, the pending sell limit will sell another 0.1. So we'll have 0.1 from the first trade, 0.1 from the second trade, and then both of them will have a stop loss at 16.40. So if it goes 16.40, hits the stop loss, we take the loss, and then we go with another trade, with another strategy, whatever. And if it reaches the take profit, then that will be the take profit for the 0.2 lots that we will have at that time. So this is called a sell limit order. But if we want, for example, to sell from lower level, let's say if the market reaches the 1546 level here, which was the low of the day today, then the idea is to place a pending sell stop order. And using the same strategy, we go on the volume here, And on the volume here, we leave the 0.1, but on the instant, instead of instant execution, we go with the pending order. And on the pending order, we go sell stop if we want to sell from a lower level. And you'll see that the MetaTrader doesn't really let you to put a different price, a higher price. For example, now it is 16.06, 16.04. And if we want to place a sell stop order, and if we put a bigger value, 1.1650, for example, 1.1650 for a sell stop, you will see that you could not place that one, but you can always place a pending order, a sell stop order from lower levels when compared with the current price. Also, all the orders that we discuss, or all the pending orders that you will use, they have a validity or an expiry time. Here you can put, I don't know, that the order is valid for the next 24 hours or for the next 48 hours, for the next week. And if the market or the trading platform, the market doesn't go to that level, the order automatically disappears. So that would be with the selling side. On the buying side, if we are bullish on the euro US dollar, and let's say that the market goes and takes our stop loss at 16.40, right? Well, if it goes that much to 16.40, maybe I want to buy at that level. But buying from a higher price than the current market price is called buy stop order. So let's put a buy stop order. We will lose at the time 0.2. Let's make it a 0.2. If the market goes at 1.16, let's say 41, let's say 42, so that we avoid a spread, we could take profit to recover the loss 1.1682 to make 40 pips, and the stop loss 1.1620 to reach 20 pips. And that would be, we place the order, and that would be a pending buy stop order will happen, or it will get activated if the market reaches higher levels than the current ones. And of course, the opposite of a buy stop is called a buy limit order, when we want to buy from lower levels. Buying from lower levels means we place a pending order to buy from, I don't know, 50, 70 or so on. I won't place the pending order, but the principle is the same. You simply choose the currency pair that you want to trade, and then double click on it. Instead of instant execution, you choose the pending order and then buy limit here instead of buy stop. And these are the 4 types of pending orders to use with the MetaTrader. There are also some other ones like the trailing stop, or one cancels others, but these are not coming with the default settings. You will need an indicator for that, but that can be easily imported, as we will demonstrate in this webinar as well. Now, the next part on the MetaTrader as well is how to attach an indicator to a chart. And in order to do that, let's choose a different currency pair. Let's choose this time the Great Britain pound US dollar. If you want to open a new chart, so this is the chart on the euro US dollar, this one here. But if you want to open a new chart, then simply go on the currency pair, right click, and then chart window. And the new chart appears, this time the Great Britain pound US dollar. And you can easily switch between the 2 or 3 or 100 or whatever, how many charts you have there. And the way to attach an indicator to a chart is you go on Insert, Indicators, and depending on the analysis, for example, if you want to attach a trend indicator, then you go on Trend indicator like the Bollinger Bands or a moving average. Let's say moving average, this is the period 40, okay, and the moving average comes on the chart. If you want to apply an oscillator, not an indicator, then an oscillator, you go in, Insert, Indicators, then Oscillators, and then you'll have, let's say, the relative strength index, okay, and it will appear on the screen. So this is how you attach an indicator. Another way to do that is to go on the custom indicators, on the custom indicators. And on the custom indicators here, you have also the indicators that come with the default settings. And in order to attach one to a chart, you can simply go to, let's say, the Awesome, for example, click and drag. And by the time that it comes into the main window, you go with apply, and it will apply on a chart. That easy is to apply an indicator to a chart on the MetaTrader. Now, how to import a custom indicator? Custom indicator means one that doesn't come with the default settings. By default setting, I'm referring to the indicators that you can find on the trading platform. This one, under the trend, or under the oscillators, or under the custom one. So the way to do that is the following. First of all, you must have the indicator. To have the indicator, either you buy it from the internet or you build it yourself with the MetaTrader, with the Meta quotes language here. And the way to import it is to go on to File, and then you go Open Data Folder. When you click the Open Data Folder, I'm not going to click that, but when you click it, then you'll see that a window appears with with the location where the MetaTrader platform is saved on the computer, and then you have a tab with indicators, and you simply take your indicator, you put it there, and then you need to restart. The MetaTrader. Let me make a bit a room here. You need to restart it for the changes to take place, and that would be the way to import a custom indicator. This is also the way to import a robot or an expert advisor. Now, the most interesting part here would be how to set up a chart with the MetaTrader. To set up a chart with the MetaTrader, let's delete everything that we have here. So indicators list, we delete the indicators that we've just placed on the chart, close it, and then we close, let's take this one's from here, and this one as well, and this one. And this is our chart that comes with a default setting, the Great Britain pound and the US dollar. Now, you can do much with this one here. So we need to customize it a bit to satisfy our needs when charting, when trading. And therefore, the first thing to do is right-click anywhere on the chart. You go on the properties. And on the properties, we can change the background, for example. This is the colors tab. You have the colors and the common tab. The colors. On the background, we go and say, what? Let's change the background. Let's make it white. I don't like a black background. Let's make it white. But if you make the background white, and the foreground must be a color that contrasts with white. Otherwise, you won't be able to see all the levels on a currency pair. So let's make this one black. And then the grid, if you want grid or not, this is the color for the grid. A bar up, let's leave it green. Usually, a bullish or upward move has a green color. Let's make it then this one red. The bull or a bullish candle, let's make it in green, and the bearish candle, let's make it in red, like this. And then we simply click OK, and this is how the chart changed. Now, it's still not enough. Why? Because if we want to apply technical analysis, for example, here, to draw a trend line or a channel or whatever, we cannot do that here as there's no room on the right side of the screen. So the way to solve this is to right-click, go on the properties, and go on the Common tab. And on the Common tab, you have the chart auto-scroll here. Now, this auto-scroll function means that if you want to check all the prices, if you leave the chart like this, after a few minutes, it comes back to the original price. So you cannot study the history, let's say, of a currency pair. And therefore, the way to do that is to deselect the chart auto scroll, to choose the chart shift, and this is the bar type. Let's go with the bar of the candlesticks. OHLC refers to open, high, low, close in a trading platform, and if you put the mouse on any candlesticks here, you will see the OHLC, but you don't need the OHLC. because the MetaTrader platform anyways will show you the OHLC here by default. Show grid if you want to see the grid or not. I don't want to see the grid usually. And this is how the chart looks like. Now, what a difference between the original chart that comes with the default settings and the classic chart, or how we customize the chart. And also you have this here on the upside, you have this small arrow. If you want to have even more room on the right side of the screen, you take the arrow, you drag it like this, and now we have room for making a technical forecast on the right side of the chart. And this is how you set up a chart for your convenience. Some traders prefer black and white candles. Some traders prefer blue and orange as a contrast. So you can do whatever you want. The MetaTrader 4 is a fully customizable trading platform. The next thing still on the MetaTrader, or the last thing on the MetaTrader, is or deals with a few tips and tricks with using the platform. Tips and tricks. For example, if you go and take a trend line before using it for the first time, and you draw a trend line, you see that it goes like a ray like this, which is not something useful for many traders. And therefore, you select it, right-click on it, you go on the trend line properties, and under the parameters, you have this ray, which is checked. This option. You see that the trend line goes like a ray, indefinite ray on the right side of the screen. Deselect it. And then like this, and this would be your trend line. And now if you delete the trend line and you take another one, automatically it will stay as a classic one and not a ray one. And the MetaTrader will save all the changes that you make. Another trick is that if you try to select an object like the trend line here, you cannot select it with one click. You need to click twice. Now, for a trader, especially for a technical analysis trader, this is a bit annoying because it takes quite some time. But the MetaTrader has an option. If you go on Tools, Options, and then you go on the objects here, there is a small box here to check. Select objects by single mouse click. Single mouse click, and then you click OK. And then from this moment on, with one simple mouse, you can select the object, being a trend line or whatever the object may be. And this is a short introduction to a MetaTrader, to the MetaTrader 4, being the first part that we wanted to discuss in this webinar. As you can see here, the euro US dollar now trades 16.03. And in order to, we move forward with explaining the Forex Dashboard, and this is the Forex Dashboard. As I said, we have two prices all the time, the bid and the ask price. Now, when we sold the euro US dollar a bit earlier, we sold it from the bid price because you can only sell from the bid price. But let's go on our position. This is the open position. Now we have a profit of 1.2. But if you want to close an open position, you can close it only from the ask price. This is called squaring the position. And the difference between the bid and the ask price is called the spread. Now, what is a bid? Because if we close it here, let's close it here. Close order. So we close the order right now, close order. And if we close the order and we took the profit, let's close also, cancel the pending order. So we make sure that we don't leave anything behind. Delete this one and delete this one. So we've made a profit of 1.4 US dollars. Now, in order to check that trade or the history of the trade, you go on the account history. And let's go on the account history, and it tells us what? It tells us what we've done so far. We sold what? We've sold euro US dollar 0.1 lots at 16.041. And we close it at 16.027. The difference between 16.041 and 16.027 represents the profit. But that difference in terms is called, in terms of the profit comes also in terms of pips, not only in dollars. Pips means if we if you make the difference between 16,041 and 16,027, the one the 1.3 is the difference between the 1.4 is the difference between the two prices, and that's called a pip. The pip refers to the fourth decimal in a quote. For example, in Euro US dollar is 1601, so the 1 represents the pip, or 3277.9. It's not the last one, the fifth one, but the fourth one. So that's a pip. How to make a profit? We just illustrated how to make a profit. If you sell, you expect the market to move to the downside. So we sold 1604. The market moved to the downside. We close at 1602. The difference is our profit. The cost associated with trading. There are multiple costs associated with trading. One is the so-called commission, and the commission, when you open a trade, automatically you pay a commission, and that commission is deducted from the equity and balance of that account. It is a fee for the broker for being an intermediary or the middleman between the interbank market, which is the Forex market, and the retail trader, which is a trader like you and I here. Another cost is the swap. As you can see here, you have the swap cost. Swap refers to the interest rate differential between two currencies. As you can see, the currencies here are paired one by one, and the interest rate differential between the two represents, or each currency has an interest rate. For example, in the United States, the interest rate now is 2% on the dollar, in euro is a negative -0.4, and that interest rate differential creates a swap, which can be positive or negative. If you open a position having a long-term horizon for your trade, then the market will reward you with a positive swap or a negative swap, depending how the interest rate differential is. So at the end of the trading day, at the end of each trading day, you will have either a plus here on the swap or a minus. Another cost would be the spread. The spread is the difference between the bid and ask price. As you saw, you sell at the bid, but we closed at the ask price. So the difference between the bid and ask is called the spread, which may be fixed or variable depending on the type of the trading account. And that would be pretty much it with the cost associated with trading. I would also like to emphasize here on a trading account the difference between these three things here: the balance, the equity, and the free margin. The balance is relative because the balance won't change if you open a trade. But the equity is the most important one because it reflects the true value of the trading account. When the trade rises or the profit, you have a profit or a loss in the trading account, the equity will change automatically, not the balance. The free margin here shows when you open a trade, like we opened that 0.1 trade on the euro and the US dollar. When you open a trade, you need a margin for that trade, and the broker would block that margin as a collateral or as a guarantee. Now, if the market goes against you and you open another trade and another trade or other trades on different currency pairs, then you'll find out that you will have no more collateral available and no more free margin. At one moment of time, the broker won't allow you to open new trade, and the margin is proportional with the leverage in the trading account. When there is no more free margin, the free margin, let's assume on the euro US dollar, now we sell, we sell 8 lots and then 100 lots. And at one moment of time, there will be no free margin because we blocked our margin in the opening positions. And then what we will do is, of course, if the market goes even the slightest distance against us, then we'll receive a margin call. By receiving a margin call, then it means that the broker gives you two choices. First, to come with more funds in the trading account, which is only logic, right? And second, to close part of your opening trades. If you don't do either of them, you will get a margin call in the sense that the broker automatically will close your positions the more the market will go against the original trade. Also on the Forex, also on the trading account and on the Forex dashboard, another thing to discuss here refers to the currency pairs. This one here. Now, these currency pairs, as you can see, there are plenty of currency pairs in this world. All these are currency pairs. They are grouped 2 by 2 and express the differences between economies. But the pillar of the Forex dashboard is the US dollar, and the US dollar, or all the currency pairs that have the US dollar in there, are majors, and the other ones are crosses. This is a major pair: Euro, US dollar, Great Britain pound, US dollar, Australian dollar, US dollar, US dollar and Japanese yen, and the other ones are crosses. For example, not this one, but Australian dollar, Swiss franc, or the New Zealand dollar and Japanese yen, all the currency pairs that don't have the US dollar in it. The difference between them, or the reason why they are split like this, comes from the fact that the US dollar is the world's reserve currency. Foreign nations, they choose to keep the US dollar in their to keep their reserves in dollars, and therefore there's a constant demand for dollars. The US dollar pairs enjoy more volatility than other currency pairs, and this is why traders like the US dollar pairs or majors more than crosses. Now, if you have a technical analysis strategy that deals with crosses rather than trading ranges rather than trends, then you might want to trade crosses, like Euro, Great Britain pound, for example. If you go on Euro, Great Britain pound, let me try to find it, or on any other currency. This is the Euro, Great Britain pound. If you drag it on a chart, and if you look on the daily chart, what you see here is a range on the Euro, Great Britain pound. So if you have a range trading strategy, you can easily, in the last year or so, profit from all these market swings. But this is where we move into technical analysis as we approach the end of this webinar. We still have time. Technical analysis means or refers to using a currency pair. Let's drag the Euro US dollar here. Using a currency pair or the information from the left side of the chart to project it on the right side of the chart. This is what technical analysis is. And anything that you use from the tools here, either indicators, trend indicators, or oscillators, or simply trend lines, or channels, or Fibonacci tools, or Andrews pitchforks, anything here and much more represents technical analysis. Now, technical analysis doesn't tell you anything. It gives you an idea, and it shows you the possibility or the probability where the price would go. And for example, support and resistance levels around the trend line. It's very easy to find support and resistance. Support and resistance forms either on the horizontal, okay? Let's double click on this trend line, make it a bit bigger, change the color, let's make it in black, like this. And this would be a trend line. What does it mean, support and resistance? Support and resistance, it means that price comes from the downside, hits a specific level in the FX market. It's not a line, but it's more like an area that acts. Let's change the color for this one. Let's make it in, this one here. It is more like an area that acts as a support or resistance. And support always transforms into resistance, and resistance transforms into support. So price here tried to break to the upside, failed, resistance, and then it moved to the downside. But at the second time, it broke the resistance, and then the resistance turned into support, and then support, and then now the support seems to be broken a bit here. It's still too early to say on the Euro US dollar. This is called the horizontal support. But there's also a thing called the dynamic support. The dynamic support is more important, or dynamic support and resistance is more important, if I can say so, because it deals against the trend line, and the trend line that follows the price action. So the euro-US dollar now here reached this trend line, which now provides a dynamic support. Why? Because if you draw the trend line from the downside to here, it provides a dynamic support right at this time. But this is also a confluence area. A confluence area refers to an area where two or even more support or resistance levels come into place. Here you have the classic support, the horizontal support, but also the dynamic support coming into this area. Now, this is difficult to break because it's called a confluence area. But the more the price has the ability to come to it, it dropped for the first time to 1530, 1517 or lower. And then it jumped all the way to 1850, but then came back to it. So the more it will test it, the more power will have eventually to break that area. If we move on to higher highs and lower lows, higher highs and lower lows refers to a trend. Always higher highs, or when you have a bullish or a bearish trend, in a bullish trend, the market won't go in a straight line, but it will go with a high and then a higher low. This low here is higher than the previous one. Then it will make a higher high and then another higher low, higher high, higher low, another one here, another, and this is how a trend moves. The opposite happens in the in a bearish trend, of course. Trend lines and channels. What do we know about trend lines and channels? Well, we just draw a trend line, the line of the trend. Any trend has a trend line. You connect the series of low and then a higher low, higher low. You connect those series and you have the main trend line. How do you build a channel? You simply copy. To copy a trend line, you select it. Then you push the Control tab on the keyboard and then you click it again. And then click and drag from the middle and you have the new trend line. And you simply paste the new trend line on the opposite lower high now. So this will be bearish trend that makes lower lows and lower highs. You paste it and then you find out what? You find out the dynamic resistance this time. This is not a wise place to be long, still long on the euro-US dollar here or actually here. This is how you build a channel. Regarding trend indicators and oscillators, the most important trend indicators and oscillators, you have them already with the default settings. Let's go and take the trend indicators. On the trend, the most important trend indicators are the moving average, for example. Moving averages, you can put the smaller the period on the moving averages is, the closer to the price is. The most advanced, if you want, or the most powerful moving average is at 200. And 200 refers to the candles or the periods on the screen. This is on the daily chart. So the 200 moving average period would look something like this. And the interpretation is quite easy. Whenever the price stays below the moving average is bearish, we want to sell the spikes, or whenever it stays above, we want to buy a support, for example. So this was a very nice place to go on the long side. This was a very nice place to go on the short side on the moving average. There are plenty of strategies to use with moving averages. You can put as many moving averages as you want on the screen. Another important indicator is called the Ichimoku. The Ichimoku, let's delete everything that we have on the screen. The moving average here. And then if you want to delete the objects that let's leave the objects. If you go insert indicators and we take on the trend in the Ichimoku, or it is also called the cloud. And this is more of a trend indicator in the sense that the price, as long as it stays above this cloud here, is bullish. When it turns in below the cloud, is bearish. Look at the euro-US dollar here. So selling here as it went below the cloud, as we know the cloud in advance, and staying on the short side, looks to be the winning decision. The Bollinger Bands is another trend indicator. Let's go and take the Bollinger Bands. So insert indicators. We go with the Bollinger Bands, and you apply it on the screen. As you can see, the bands follow the price action, and the idea here is to buy the support or to stay on the long side when the price stays in the upper side of the channel, and on the short side when the price stays in the lower side of the channel. And then by the time that it moves into the other part of the channel, reduce the position or book the profits, as we did with this with the trade that we took today. Besides trend indicators that appear on the actual screen, we also have oscillators. And an oscillator, for example, the relative strength index, which is the most popular one, any oscillator appears at the bottom of a chart. As you can see, the chart window, the main chart windows becomes smaller, and the oscillator comes here. Now, the oscillator comes with two areas. The overbought area, in the case of the RSI, is 70, and oversold area 30. And the idea is to sell when the market comes into the overbought and to buy when the market comes into oversold. It doesn't always work like this. It works when the market is in a range, but when it trends, it doesn't really work. So you need to look for divergences, and there are a lot of other technical analysis tools to use. Other important oscillators are, let's go on the oscillators tab, the MACD, or even the momentum is another important oscillator, the stochastics, and they all come with an overbought and oversold area. I will stop here today, even though we had in focus the basic fundamental analysis concepts. I don't want to rush into them because they are quite important. And I invite you all next time to start with the basic fundamentals and then to discuss more about fundamental analysis or news trading that comes to complement technical analysis. Thank you for being here, and it is time for questions, if any. Let me stop sharing the screen. Bye-bye.